All right, everyone, welcome back. We are going to take a quick look at ACH. So I think we're going to switch things up here on the channel just a little bit. I've been going through multiple charts this morning, and the 3-day chart with the new EMA settings that I have here seem to paint a way better picture, to give me a way better look at the accuracy of where things are going at. So just to try to keep it real simple, we're going to watch the bullish and bearish crosses here on the EMAs. You can see when the blue's over the yellow, we're going up. When it crosses below the yellow, the price is going down. And that's going to give us some confluence when we're at support and resistance here. And keeping it simple with the Fibonacci's here on the larger time frame is going to make it a lot simpler to understand what is going on. Instead of going down to the daily like we have been and just kind of looking at all the little patterns and shapes that form and not getting accurate information, because a lot of times from what I've seen, these patterns and shapes for the most part don't play out. Sometimes they do, sometimes they don't. Most of the time they don't. So just clearly looking at the chart here, we got a rejection at the 382. Momentum is clearly down, as we can see. We broke down below that 2 penny mark that we were looking at last night. And you can see that the price of ACH is coming back down to the 236 here. And I would say that potentially is going to break if we get the blue to come back down below the yellow. You can see it is crawling down here. And we're going to draw one more Fibonacci on the chart. I think that's how we're going to do things here. We're going to draw one larger fib and then one smaller fib to get some more accurate targets here. So you can see that off of that wick high, that 382 rejection, we're coming back down to that 236. And we do have some confluence here with a double Fibonacci. You can see we have the 0.5 at 1.7 and that 236 at 1.7. So it looks like we're going to drop about 8% here and come down to that 236.5, and then maybe that's when we go back up for something like this. Any lower than that 236 here, that's not going to be too great for ACH, and then there's potential for way lower price targets here. You can see the 618 retracement is about a 14% drop to 1.6, and then that 786. But ultimately, the fact that we're in the beginning stages of the bull market, I don't think ACH has time to come all the way down back to the bottom here, especially off of this very nice double bottom here and this higher highs and higher lows scenario that we are in right now. It looks like we're just getting a temporary retracement, and then we're going to continue going back up. So if you take out the 1.9 level at that 382, I am looking for the double fib here to hold for support. So about an 8 to 9% drop still in play for ACH here at 1.7 once we took out that 2 penny mark that we discussed in the last update. So yeah, we will leave it at that, I guess, for now on ACH. Like I said, we're going to switch things up a little bit here, keep it more accurate as we can. Heikinashi printing red, no shadow on the day, so it is trending down. So we'll see if the support at 1.7 can hold. And that's all I really got for you for now for ACH. Of course, if you're like me, we're watching these things on every little dip, every little retracement. We're trying to add to our position. So have patience, and you may get ACH down here for another 8% drop before you can add to your position, and then we'll see what happens from there. It may go lower. I do not know. Like I've always said here on the channel, nobody has a crystal ball. Nobody knows. And we can simply just watch these support and resistance levels here on crypto. So yeah, I will leave it at that on ACH. Good luck, not financial advice. Thanks for watching, and we will see you in the next one. Peace out.